All right, good evening, guys. Ken at Tortoise Capital. This is the Creativity 202 check in for May 9th, 2023. And I think we are on, if we were keeping score on a weekly basis, this is session 11. So it might be lesson 11, but it's really the lesson that you're on. We'll just start with a quick check in. I'll get us started. So this morning I went over the 2 million words produced uh, benchmark with the koala writer. Now, to be fair, that's divided by 5 because it counts those words as 5 to 1 when you're using GPT-4 versus 3.5 turbo. So it's really only 400,000 words in the last 3 weeks. So if I'm being honest, it's just a shade under a half a million words. But the net effect of that has been to essentially rewire my brain completely. I've noticed that it has affected the way that I am narrating and dictating prompts in the way that I write emails regularly. I've always been a good email writer, but now I am remarkably clear, unusually clear. And I would say that my creativity for second and third order effects is much improved because I have been essentially downloading all of the mental models that I've ever used in the past 50 years and writing these synthesis essays with the help of the koala as a way to check my memory to see if that I actually remember what it actually is, or do I just remember my memory of it. And that is causing me to improve my recall and my appreciation for the models and to see a lot more connections between them than I might have seen before. Like, it wasn't until this project that I really appreciated why we should ask the question, what's the difference between a learning organization, a mastermind, an accountability group, a self-directed work team, a community of practice? There's about 80% overlap between all of those things, but there are important structural and policy and power differences associated with each of them and slightly different purposes for their coming together, their operations, and the social norms that go into them. And it wasn't really until I did a survey of the literature on their origins and their implementations that I really began to see how important that distinction really was. And I've seen that in any number of the models that I typically use for thinking. A lot of systems thinking overlaps. A lot of the statistical process control, manufacturing quality control, Lean and Six Sigma, and statistical thinking in general has really reminded me a lot of the conversations my dad and I used to have way back in the day when I was a shop monkey and he was the design engineer who had grown up in quality control. So this project's been a nice way for me to revisit my relationship with my dad and see how the influence of industrial manufacturing and quality control and large scale operations has really shaped the entire approach that I bring to trading as an enterprise. And so it's been an awful lot of fun for me to go through that. And that's going to be my true story and work in progress today by way of check-ins. So that's how I am these days. Art, how are you doing, buddy?
I'm I'm doing better. This week's a little more low key than the past two or three. Um, so I still have that project from work that's taken up a good bit of my time, but I got a few days of respite. And then we got the final push through the end of the month. So between that and taking up a lot of time for practice for my upcoming concert. It also right around the end of the month. Last concert of the year. I've been pretty busy on those two fronts. Um, but I'm doing I'm doing okay, and actually trying to practice just taking a little time each day and being still with myself, and also being less practicing being less reactive. And those are my two big work in progresses for the latter part of last week and this week. That's where I'm at.
Well, I think that's where the mindfulness starts, is just connecting to that, putting a wedge between the impulse and the action, you know, making it an intentional action. Luke, how are we doing?
Yeah, going good here. It's starting to get quite cold, but everything's good. Trading this week has been fine. Work's been really busy, but otherwise, yeah, still poking along.
Very good. And Dan, bring us home. How are we doing?
Very well, thanks. My granddaughter was born, I think, 14 days ago, Layla May Bloom, and I've seen her twice now. That was awesome. And aside from that, we're going out to visit my mother-in-law on Memorial Day weekend, and I've been trading and working with the AI system, and got a paper done for my cybersecurity client a few weeks ago, and thinking about starting another one, but not in a big hurry.
Very cool. Okay, well, I'm going to hit the tones and move us into the circle, and we shall see what comes out. So here we go. Luke.
Just share my screen. Okay. So for this lesson, plunge into the unknown. The screen's come up now. Yeah, all good. So for this lesson, what I've done is the unknown for me is not really
Okay, I'm gonna go do my DVD and then
following
maybe
the
we can
rules
take,
as strictly as what I was doing when I was trading Cliff a couple of years ago. So in terms of looking at the chart at the end of the day and just basically looking at very rudimentary rules, very easy rules to follow, working out if I mark the chart up based on those rules, were there any gains to be made? And from that, just having the basic necessities of a trading system. Now, I look at a 3-minute chart, and I look at a lot of different stocks in the morning when I get into work, and the other ones would be what Ken has told us the frog champions are: Home Depot, Alcoa, US Steel, Treasuries, real estate, so on, property group. I look at all of them, but I really only mark up Cliff, and that's just my feelings that it's. I know this stock quite well, and I look at the standard risk box and work out where the movement has been in it. But in terms of this system, the PSAR is based on a 0.08 maximum, not a 0.12. And the entry will be when there's an RLXD and a PSAR flip. Get in on short, 1 cent below that, and then conversely along will be an RLXD PSAR flip. The execution risk is tighter. It's not on the PSAR, it's based on the dragon. And the exercise, the lesson was basically you give it to a different trader and see if they can follow the rules. Now, this is different to how I trade the Aussie dollar or the DAX during the day. And so therefore it's taking on a different trader and giving those rules to that trader and how they can follow them. And some of the questions that came through this exercise were, how does anxiety come in looking at this? It's very much, I get quite anxious looking at the chart because I can see, oh, that's gone to quite a high point, it's got to a high today or a high of the previous day, and then it's dropping a lot and leaving a lot on the table. But I've got to recognise that that will happen, and whether or not I actually want to, and just note that down and then come back to it after I've got a certain number of days marked up to work out how we can refine that if we need to. Because what I'm trying to do is get these system rules in place to make them quite easy to be able to code to work out if it can be put into TradingView, just to run it, just to see how it can do. Because we can do back testing on it, but I also want to see what it would look like when it's marked up, and if I can make sure that the system rules can be codified and actually just run on Cliff and all the other ones as well, and see what it looks marked up. And if it doesn't work, fine, but if it can be just used on that basis, then take 1 to 2 hours a day, just based on the fact that I'm not up in the middle of the night. And if it can be run in that way, fantastic. And then if not, then work out how you can refine it. If that doesn't work, just work out the next steps based off that. There are some trade management rules in terms of when the price does come down, comes down at this level, and there's an RLXD. But because this PSAR is quite, it gives a lot of room to stay in the trade. Then when the price goes back up to this level, I'd move the stop loss up to here. So there's a couple of things I haven't marked up in the chart, but that would be moving the stop up to this point as opposed to leaving it at -1 out there. Another question was, I'm not worried about the ownership of these rules because hopefully I can just codify and it can just run. And I'm not trying to second guess the system. It just runs as per what the simple rules are. And I need to feel content to just be in the trade and overcome the frustration that some trades might leave a lot on the table. Because if this trade came down violently here, then I could look at the maximum adverse excursion and be quite annoyed. But I've got to be content in the fact that it's very simple. The rules are simple, and I'm trying to stay in the trade for longer, as opposed to trying to be a scout and stopping, reversing, looking for a card to, as what we would normally try and do as per Ken's rules. Also trying to look at taking a loss just at 0.6. If the trade goes totally against you, like here, RLXD PSAR flip to go long, then it goes short, just take it at a 0.6. And just knowing that these rules are quite simple and working out what our aim is for the day. Like, really need to look at this system and think, if it gets to a 2R level where you can actually take it at 2R, do I just put in a no lose cost input 2 at 0.2 and just trail it from that point? So I haven't refined anything. I think that after having 30 of these charts marked up, I'll have some more analysis to look at to really look at what I'm trying to aim for. Because if I can make 2 hour a day of this and another symbol that's not highly correlated, then potentially it can look at just making 1 to 2 hour a day based on this, and it will just trade for me. Now, obviously, this would be paper traded in TradingView, see what it would do on a demo account, and we'll put some skin in the game at that point. That's basically what I've done for this lesson this week, and the work in progress as well is from last week. I've gone through a couple of the other trades that I've done, looked at the maximum adverse excursion, and really just focusing on trades that if they haven't moved out of the station, trades haven't moved at all, just taking a loss at 0.6. And if I get back in on a re-entry, just take the re-entry and just manage that trade based on that. And I'll mark up my chart from last night. I just got really annoyed with this trade, and it just didn't move out of the station, and it was just really annoying me. I just cut it, and I hardly ever do that. I look for a level where if it came back to a certain point, then it would negate the fact that that trade would be working. But I just cut it, and I felt relieved to be out of the trade and not frustrated that it eventually did move up, but then it came back down again. And that was a trade that was where I was frustrated and annoyed that it didn't move out because I felt like it should have. That was a feeling. And I just thought, well, I'm not going to be able to make this trade move, so just cut it and see what would have happened. And I would have made the same amount of money anyway. So I was comfortable in the fact of being able to get back to the zero state. And I noticed at that point I had no more will to actually trade. So it was actually a good note to leave the day on that note, because I didn't risk anything. I just got out of that risky. I got out of the risk, so I felt comfortable in scratching that trade. So that's me for the week. I hope.
Dan.
And you're muted.
Need you to unmute, Dan.
Sorry, it's a little tricky to do these controls when you're in screen sharing mode. Can you all still see the screen? Okay. I was saying that some of us were doing the traders exercise where you try to trade each other's rules. And so I have some rules here that I got from Jeffrey Southern, which I tried to trade, did trade. And also I wrote up my rules, how I trade the 30-minute chart, although I did not write it in a way that it would have to be on the 30-minute chart. And I think Jeff tried to trade that. And then I tried to trade his. I started out trading it on the TradingView by bar by bar replay. And then today I did a couple trades live for just $2 risk. Now, these 7 points here describe the rules. It's a visual box trading system. Basically, you draw the box, you enter long when price breaks the top of the box, enter short when price breaks the bottom of the box, exit at stop -1, consider stop and reverse. Or you can do a -1R trail stop. You can do no lose plus dinner for 2, or you can exit at 2R or greater. So I adopted these rules. I added a couple things to them to kind of make it mine. I just specified that, oh wait, this isn't the one I want. Yeah, I just added that I would use it with the symbols that we've been trading with the community of practice, Ken's symbol list, to find the upward or downward movers, or look. I wanted to particularly look for the morning hooks. So in the morning, I would look for the downward movers, and then I could put the center of the box around the low of the day and see if I could catch it coming back up. But when I actually did this, I pretty much just followed the price across the screen, drawing boxes and looking for entries and exits. So I did quite well with it in TradingView bar by bar replay. I didn't manage to mark up the charts a lot or record any results, but actually I think I may have recorded results, but I got good enough feeling for it that I thought I'd trade it this morning. And so I played around with EWW and X, which you will see here on the TradingView screen. What I did in the morning, I was stalking EWW and I was stalking X. And earlier on the chart, I don't show it here, I got 2 no lose plus dinners for 2. Well, very sparse dinners, I will say. And then I hit this trade where I got about a minus 0.6R. And I hadn't written in my rules, but I sort of had an informal idea that I shouldn't be trading during the noon hour. And this may have kind of confirmed that. It was also happened to be a time when the main market was pretty much moving sideways. And that's probably why it couldn't really get a move on here to continue. The other thing about the United States steel was, as you can see from the daily chart here, it's been in a pretty serious downward move. And it's coming off the bottom there. I guess it's in a critical state because it's paused this rush to the bottom. But I really wanted to trade it short. And this morning, you see here it opens up at 9:30. You see it opens up here. It did gap down, but it wouldn't go lower. And, you know, I'd framed some trades in here, but I couldn't get a short trade because it didn't follow through. So I went out, I think I walked the dog or something. And then when I came back, it happened to be lunchtime. And this was what I was given, and didn't work out. But I like looking at these bars, finding a consolidation area, drawing a box around it, and then taking it when it breaks out. And so, although I didn't do anything more with real trading, I could see where if I'd kept at it, if I'd put alerts here, or if I'd kept coming back to the screen, because this is just a 3-minute chart here, so I could have stayed with it more. I could have gotten a good trade up here where I had a box. And so I wrote a paper trade entry. This would have exited at 1/2 hour, or maybe if I'd done it tighter, it would have exited at more like an R or 3/4 R. And then it would have stopped and reversed here and could have done a 2-hour trade out of that, exiting at the end of the day. And I think you can also see that these two entries, these two paper trade entries are supported by the MACD here, or indicated by the MACD. You have summer, fall, summer. And here you have on the short, you have crossing over into winter, crossing the 0 line into winter. So it's nice to be able to see these and see what I could have done without too much difficulty if I'd stuck with it. So I'm going to keep trying this, but I think I do need to do a little bit more bar by bar replay in order to get the muscle memory. Or maybe Jeffrey said that he likes to do it on the 1-minute chart to get a lot of reps. Do something like that to get more muscle memory with it. But I kind of like it. I noticed that you can turn the indicators on and off just by clicking your I button on the trading view. And I can sort of see how this aligns with the RLCO system. This one I took here was a rather late PSAR flip. Another reason maybe why it didn't work so well. This one here, though, would have been a good Kata 2 pullback coming in on the breakout from the pullback by the dip. And then here, this exit would have also been a PSAR flip. That's exactly where I'd want to exit if I wasn't doing the visual box trading. And then it forms a Kata 2 short, and you can see that these entries are good whether you find them through the second 2 entries are good whether you find them through visual box trading or through the RLCO setups we normally use. So I think that's all I can say about that. What we learned was that it's valuable for us to, like Luke was saying, to go through the exercise of describing our rules so another person can understand them. We also learned that when you take someone else's rules, what's the first thing you do? You have to change them a little bit in some cases to sort of make yourself comfortable with them. Although I suppose you don't have to, but that's what we both did. Aho.
Yes, sir, Art.
So, like I said at the beginning of my check-in, the I've been focusing primarily on trying to work on stilling myself, and I haven't been wasn't able to connect with anybody to do the actual trading exercise. But I did want to ask if anyone wanted to send email out the some system rules or something. I definitely would like to give it a try. I think reading the story on Sun Tzu, the thing that struck me the most was the how he practiced so much to I guess become comfortable at dealing with uncertainty. And that made me really stop and think about how little of that I do in my life, how much energy in my life I spend actually trying to, control a lot of outcomes and focus on just trying to keep things and operate in a certain way. And then in terms of trading a little bit, I was just in listening to everybody here and thinking a little bit about that before the call, just in how we really do address kind of like certain uncertainty in our systems other than like having our stops positioned. But anyway, the the other thing that I mentioned that actually what I think I ended up doing with the exercise, even though it was a while back, was actually joining my chorale group back in December. And that was something I had never done in my life before. I'd never sang in a group before. And I went and gave it a shot, and I'm still there. And that was actually kind of that's been a good, interesting experiment. And then from that, I found that I was able to more comfortable in joining a second group to sing a little bit more as well. So that's what I guess I could report on one of those exercises. So like I said, that just focusing more on trying to still myself and just a little bit more space in and not be so reactive to what's going on around me and not so anxious about events that may happen. That's kind of where I'm at today. So, aho.
Let's see. Yeah, so I wanted to share some work in progress that I did. And this came out of the foundations course, and the guys were kind of struggling with how to achieve a average loss of minus zero point 0.6. Here's the simplest way I know to do it, and a way to keep your risk reduced. So let's suppose that we had something like this. We had some PSARs coming down, and then we had some PSARs going up. And we might have seen price do something like this. And we might have said, well, you know, this was, if I was checking things out down here on the old MACD histogram, that this thing might have gone into the winter somewhere here, and then maybe spring, and then somewhere in here it might have been summer and fall, something like that, you know. And we wouldn't be surprised if we had something like this as a standard risk box. I want you to take a look at the case of two traders, A and B. Trader A takes the risk box and calls that 1.0. Let me get that. I want to do that differently. He calls it 1.0, and this guy calls it 0.6. And both of them have otherwise this exact same trade frame. This is some kind of reasonable target up here. Now just unmute yourself and say, what are the things that could make that a reasonable target? What are some things that might be? Let's just call this, if this was an intraday trade. It doesn't have to be intraday, but
Is the high of the day or some kind of chart resistance up there?
yeah, I agree with all that.
Range stat?
At least. Yeah, so this could have been, let me draw it. I like drawing the range stat in orange. Especially if that's, you know, that's the low of the day. This might have been, yeah, it might have, if this was where it opened, and then price came here, so that might have been the open. And it sold off harshly. That could be a harsh winter. And then it would be nice if that had come down to a fail stat. So it was a sharp move to the low of the day. And then we can define this little risk box here. So now let's say that both of those guys are eager to have their average loss 0.6 so that they don't take a full 1 hour loss. Because a 1 hour loss represents X number of dollars. You know, a 1 hour loss equals standard risk per trade. And that's, we feel that in dollars, right? The first guy justifies the trade. It's got to be at least 2R so that he can have a 2-to-1 reward to risk. A reasonable reward, manageable risk, 2-to-1 ratio. What if this guy just says, hey, I need to see 3R? And so the first guy goes, well, the size of this box is 1, 2. And there's at least 2 of those to the upside. So he can make the trade, check or hold. And this guy, the second guy says, hey, that's only equal to 0.6. So the full loss for me is going to be 1.0. So I actually have to see 2 of these boxes or in other words, 3 of these boxes. So this trader B has to see more room for his reasonable risk, because he's going to take that and what if they both just decide, well, actually the first guy, he uses that 1R stop as a protective stop. Don't take more than that, but he really wants to take a 0.6, right? But that's inside the noise box. That's inside the noise between the PSAR flip, which is defined as that lowest dot here and then the first dot down here. So that yellow box is all the noise. So he is automatically putting himself in the, if I'm trying to exit at minus 0.6, then I have to make some kind of interpretation about price action that says the price action inside the noise box is going to give me a signal that's not noise. You see the psychic disconnect right there? I'm defining it as noise and saying it's a noise box. There is no way that that has any information content, but I'm going to try to act like it does. That sets up a cognitive dissonance in your head that you cannot escape. The only way that guy ever really gets to a 0.6, honestly, and sort of with, I'm not going to say with integrity, but with respect to his rules, is if he said, I'm going to use a 1R trailing stop, and then this thing moved up to 0.4 in the green, so he's plus 0.4, and then it sells off, and he honors his rules, and now he escapes. He turns a 0.4 into a minus 0.6. So he achieved his objective of a 0.6, and he followed his rules. I'm betting he has a bitter taste in his mouth. That's just me. But you can see that this framing really sets up some psychological distress. But Trader B just says, let me take the rule-based exit that's justified by the trade frame, which says I'm treating the PSAR flip box as the first signal to tell me that this trade failed. It ain't happening. The first signal that he gets out of that noise box is really the collapsing dragon, which is a violation of, wherever that the RL10 bottomed out with a V bottom, because that's how it works. And then that's where the first dot of the PSAR is drawn. So as soon as price crosses that, we officially have a collapsing dragon. That is no longer a noise move. That is a signal. So what if we just said that we're just going to set that equal to a minus 0.6, and as long as I don't get more than 0.4 slippage, I'll never take more than a 1R loss, and then you position size off of this. So if you take that stop and reverse like you're supposed to, you're not ever trying to monkey around with second guessing inside the noise box, which there's no satisfying rule that you could come up with in that trade framing hypothesis. Oh, you could come up with 20 different variations of if-then rules, but good luck managing that thing with peace of mind. Why not just set that equal to 0.6, then demand that you have essentially 3 of those boxes to the upside. If you do 0.6, 0.6, 0.6, you have to see 1.8, right? Yeah, but if you just treated that whole big box as 1.0 and then demanded to see 2 units of risk to the upside, the difference between 1.8 and 2.0, trivial. It's 90% of the way, you know. So if you I'm going to argue now that if you see your little PSAR flip, set that equal to 0.6, execute at 0.6 into a collapsing dragon, and then demand to see a criteria of 3-to-1. Done in one. Then if you do end up your worst exit on that forever should be 0.6. Would you agree? And what happens if you now restrict your frames to 3-to-1? It's not much different than what you did with 2-to-1, only you're demanding to see a better trade. And that's a bad reason, because it's not a bad reason. It's a good thing. That's a feature. Increase your strictness to 3-to-1. Set the PSAR flip box to minus 0.6. Position size off 1.0. So let's see that in practice. What if, for sake of math, the PSAR flip was 60 cents? That means my 1.0 loss would be a full dollar. So now I've got my $400 of risk per trade and a $1 position sizing risk. I can buy 400 shares. And then I have to see essentially $1.80 to the upside. So I'm still getting technically a 1.8 to 1 against the position sizing box. If you want to be strict and say, no, I need to see 2 times $1, I need to see $2 to the upside. There's nothing wrong with that. Just demand to see 2-to-1 off of your position sizing risk. Now, you want to get really fancy? Here's your PSAR flip. Here is your reasonable reward target. It must be a reasonable target. Set that equal to 0.3. Set your position sizing box to 1.0. So I've got to have 2 of those. What's that mean? That means I got to have 7-to-1. Check or hold. Do you see that? Hey, what if this thing comes down and you check your little PSAR flip and that equals your R10 MMRB, and that was the low of the day? Is that an automatic 7-to-1? That's 9-to-1. Because if that's the low of the day and you get a range stat and your MMRB is 1/10 of that, that means you have your maximum reasonable move is 9 times your MMRB. And I'll tell you what, even if this was your, like if this was an R6, so 1/6 of a range stat, and there were only 5 of those range stats above, you'd still be all right. So if you take a look at the frog box is equal to about 3 times the R10 when your frog quality number is better than 3. And now I'm getting a little technical here with the math. But you can essentially, your rule of thumb is you could position size off a frog box. You could execute manage off the MMRB because that's about 3 times smaller than the frog box. And then if you took a full execution risk loss, you'd be getting a minus 0.3, and you would not be trying to exit inside the noise. And you would be demanding to see 2 full frog boxes to the upside. And if you take if you take the range stat is the average move plus 1 SD, that's already 1 frog box for your range stat move. That's a frog box. So if you had some little box down here for your R10, you'd be fine. But this idea, I would start with this idea of just try to get to 0.6 and then stop second guessing yourself. Stop taking the 0.5 loss halfway through your noise box. Because that immediately makes you wonder, well, if it was good enough to get out, should I be taking that as a signal to get short, or should I wait for the confirmation that it leaves the noise box? Wait for the confirmation that it leaves the noise box. It's not a collapsing dragon until it goes below that. So just wait for that. Because remember, you're executing off the bottom of the R10 anyway, the RL10. And if you remember, when price looks like this and then starts to reverse, your R10 does something like this. It discounts that fat tail. And most people are waiting for a new low of the day to give up the ship because they put their stop down in here. They put their stops down in here, some distance below the low of the day. And then they buy their little breakout, whatever, their little reversal, and off they go. And as soon as this thing comes down, they're going to honor their stop, which was placed 5 cents below the low of the day. So this is where they're getting out. This is where their stop hits. And when their stop gets hit, that triggers the big move down. But you remember, we're positioning our exit at the belly of the RL10. That's where the PSAR flip switches. So when we hit here, it is still inside that fat tail. And the collapsing move doesn't happen really until that gets violated. So when you exit here and then you stop and reverse with a collapsing dragon here, you're actually front running all of the guys down here. And all these guys that are shorting this thing are trying to run those stops. So they have an incentive to go collect all that stuff. So you're triggering on that here, and you're joining the guys that are making this trade fail. But you're doing it before it goes down and collects all the stops. You're getting a very important shift in orientation to join the winning team right in this place before the belly of the low of the day is hit. Check or hold. That's really important. And so if you are aiming to get a 0.6, that's the way to do it. Make it simpler, not harder. Demand a slightly stricter upside of 3 MMRBs. And if you're intraday trading and you're looking at range stats off the low of the day, that's a gimme. That's automatic. You don't even have to think on that one. But what it does is it gives you a little more psychological comfort when it comes to realizing that your position size is a little bit smaller because you're position sizing off the 1.0 risk, but you're executing off the 0.6 risk. Check or hold. That's a really important idea. Now, I want to talk about Dan's rule set. So, if you go strictly by the task on that lesson, it was simply to take somebody else's rules as written and surrender to their rules and just trade their rules. Without any of yourself getting inside there. You said, hey, well, the first thing that I have to do is modify in order to make those rules my rules. They're not your rules. Even when you modify, I mean, you modified somebody else's rules, but you have even less confidence in them than you have with your own rules. Whatever confidence level you have in your rules, you have less confidence when you take somebody else's rules and modify them. So what we're trying to do with that little exercise is learn to surrender and to just be a good steward and a good tester of their rules. You want to feel what it's like to just surrender to somebody else's rules, to remove the obligation and responsibility of improving the rules. You just want to surrender to their rules and see what that feels like. Can you be a good employee, an honest robot for them? Can they trust you to trade their rules as they're written? It's their risk. And they're placing confidence in you to trade it the way they asked you to trade it. So that you could then just trade the rules and see what you can see about the rules. How did it go? And then you give them a little after action report that has the results specifically of their rules, and then you're going to add insights. Here's what I noticed. There are some ideas that you might consider to clarify the rules, or to add some contingency plans, or ways to sharpen them up. But then you're also going to get some insights about yourself and say, where was I triggered? What were my impulses? What are those things connected to? What does it feel like to surrender and just let them have the responsibility for the results and let me just concentrate on perfect execution of any rule set? Now, I'm not discounting what you did, because the next step after this is, after you get enough iterations of trading other people's rules, you are then in the position that my wife was in when I told her, hey, here's the frog rules. All you guys got to do is exactly what I tell you. And then if there are winning trades, it's your money. If there's losing trades, it's my fault. So you are under no pressure to second guess the rules. In fact, if you second guess the rules and lose money, it's your fault. But I already forgive you, because I put you in that untenable position. But it was really to help them discover what were the things that they were impulsively acting on. Where were their impulses? What did they feel like doing? Then after they showed me that every time they felt an urge to change the rules, they could put it down on a note sheet and yet just follow the rules. They learned to put a wedge between impulse and action. They learned that if they followed the rules and made money, they got to keep the money. If they followed the rules and lost money, it was my money that was lost, not theirs. And then they could be right and I could be wrong. And if it was positive expectancy, they'd get paid for confirming that their opinion of me was correct. I'm the dummy. And then after they did that for a week, we were able to say essentially with visual box trading that I put them in positions where they were making that entry and it would go up and then it would start to stall. And if they were following the rules, the exit was going to be right there. And I said, you're never allowed to lower that stop and you're not allowed to not take that stop. But if you feel in your heart that you need to exit right there, and then whatever extra money that you gain between here and my exit is your money. And then you got to stop that trade frame, get back to the zero state, and then execute according to the rule set. But if there's ever an impulse that you just feel like, now that I'm an experienced trader and he says the exit is here, but I feel I want to get here because I want to cash that, knock yourself out. Enjoy. That causes no harm. No harm. So that's what I wanted to say about the exercise in lesson 11, is that there's an opportunity in there to help your accountability partner, that when, this is the rule maker and this is the trader, this is the designer and that's the executor. And he wants to know how good are my rules and what happens if I get perfect execution. But also, what are the insights that are coming from my partner so that I can improve my rules? And then the executor gets to experience freedom and simplicity, and you get a change of perspective because you really do have to understand whatever their hypothesis was and their rules. So that is causing you to look through somebody else's eyes completely. And it helps you focus on execution. And then all of those things are going to yield the kinds of insights that you can give your accountability partner, and also insights that come back to you as a trader. And it may give you some thoughts about how to change those rules into R prime, your personal implementation or your adaptation. And what you'll discover is that you have sort of a region of trading proficiency in here with your rules. And that when we're trying to get better, we typically look to modify our rule set and expand it a little bit. And so we're kind of locked into whatever our starting assumptions were. But if you get an accountability partner that has some rule sets over there, and you start experiencing trading on this side and generating insights, your worldview just look like this now. Because you have enough offset that you can now look back at your own style of trading versus their style of trading. And that really does set up a low-cost way to dramatically expand your experience. But it starts with surrendering to their rule set in order to serve them with insights. So don't cross the wires. Do one part of the test first, and then do a separate test if you want to modify the rules and see how they go. Oh, and then that actually lets you, here's his rule set, here's rule set prime, and then what's the difference between them? And you got to get at least 30 trades in both so that you can then look to analyze and see what you can see. Okay? So that's what I want to say about that exercise, and also about the 0.6. And to Art's point, the simplicity that comes from stillness, it turns out that once you quiet that down and then you start looking around and you see how many other things are going on that you didn't notice, because when I'm concentrating on this part of my active brain and all I can see is this, it turns out that there's so many other things happening underneath my level of perception that it's really not all that still after all. The only stillness was that the calm that you brought to it. And then you can actually see some of these other things with more clarity, because the attention that you would have spent on your own stuff can now be spent on looking at some of these other things. And so you end up, when you get clarity at that top level, it actually lets you now look at some of the other things that were flying under your radar, but which are part of your subconscious. And then that gives you, those are those little butterflies of thought that come in while you're trying to be consciously calm. And then now the things that were always there, these are not things that just started to show up. Those are the things that are always there, churning around. And then when you use intentional actions to make that calm, and now your calmitude looks like that, you keep unpacking all of those things until you get down to some root level in some kind of zero state where you have achieved inner stillness. And now you start noticing all these other things. And now I've emptied. I've surrendered. I've emptied my bowl. And now there's nothing else I have to do until it's time, based on my intention, to go do whatever the next thing is, because of reasons. But now that's a deliberate act. A choice to move in that direction that is informed by your inner calm and stillness. So this is a progressive act of excavation. So if we think about our little base camp here at the side of the river leading to the mountain, what we're really doing is we are excavating all of that stuff on our insides, and then taking all this stuff that we've quieted and then piling it up over here so that we can remain in the zero state. And then that becomes the mountain of wisdom that we're climbing. Only we're seeing all the stuff that was buried in the darkness. We're seeing it in the sunlight. And we've sort of got this nice yin-yang thing between our depths and our heights as we live in the middle kingdom of everyday living and whatnot, And so we're living through time this way. And now by connecting the deep introspection and the ascent to wisdom, you got to come down from the mountain so that you can live in the world and serve the people until you're 80. Then you're free to do something else. But until 80, you should be serving the people. I think. That's me. Anyway, that's what I wanted to say about, where you're exploring on the creativity side. And to remember that this course is more on the creativity and where your attention goes, and not just trading. Although the trading can be a stalking horse that helps carry us. In the same way that in the Hindu tradition, they're trying to climb the mountain to the portal to heaven. And the guy rides the donkey to the top. The donkey, in this case, is trading or whatever it is that you're working on. Your work in progress is the thing that you are doing as a means to understand what the journey is about and what matters. I like in the Mahabharata when I think it's Arjuna gets up to the top of the mountain with his dog, and the heavens open up, and they say, okay, you can come into heaven, but you can't bring your dog. And he says, well, I've just spent lifetimes getting here, of pain and suffering and war and loss. But if I can't take my dog, I'm not going. And they said, you passed the test. You may enter with your dog. But that's my point. Any heaven that wouldn't have my dogs is not for me anyway. So anyway, that's everything I wanted to say. I'm going to hit the tones and ask you to listen carefully for the sound of the word that bubbles up. That is your spirit guide's gift to yourself, I guess, of the thing to focus on the week ahead. And I'll call on you in the order I see you. So here we go. Dan.
Um,
Luke.
Signal.
Art.
Practice.
Mine is dogs. Dan, I just saw your question. If I entered the CD, would I then do it when price goes below the RL10 low? No, yeah, right. As soon as the price violates the RL10, that's enough. On the short side, because fear is more powerful than greed, and if it has already dropped that far,
yeah,
ready
and,
to-
and particularly if you have one of those tails under there, that's a very
yeah, because you have
excellent
you have no
scenario
idea how
yeah.
much volume was in there, but that didn't last long. That is not even support. The fact that it was a long tail says, dude, discount that completely, and that's the beauty of the RL10 bottom, and to a lesser extent, the southern bend of the dragon. You know, before I started doing the RL10 as the entry of last resort, the belly of the dragon has that same kind of quality of being a statistically significant turning point. It's the only issue I have with that one is that, it's a smoother turn, whereas the R10, because of math, is a sharp turn. It's a very clear point, and it gives you a little extra wiggle room and space. So, But on the other hand, on the entry, when it's going up, that move through the dragon and the PSAR and your fill, that might have been such a spiky move up that your 0.6 box you decide to take at the bottom of the dragon, that's fine. And that could be your decision point. But in general, I would say you are never sorry when you use the point-to-point channel of the bottom of the RL10, the minimum, and the peak of the R10. That has such clarity and precision that it's good enough for jazz. It gives you a slightly wider channel, and the turn happens a couple bars sooner because of math. So I treat that as the genuine channel. The turning points in the dragon give you information, but to me the R10 is really, really crucial to understand. So that's everything I got for today. I'm going to get this. I'm going to close this up and start it off again so the recording can get started. And appreciate your work, fellas. And see you as soon as I see you again. Cheers.